Crypto 2022, the good, the bad, and the ugly.
Okay, good morning. Has everyone had their coffee? So gather around, there's plenty of seats up front. It's my first time to Toronto since the pandemic. I grew up just south of the border in Buffalo, New York, so spent much of my life coming here, love the city. So I want to find from the folks in the audience kind of the level of sophistication. I know that there's folks from the gaming space, from the affiliate space, people that have been in blockchain for a couple months or for a decade. By show of hands, who has been involved in cryptocurrency ever? Just raise your hands. Okay, only about a third. I guess I don't need to then ask how many have been involved since 2018. Why not? How many have been involved since 2018? Okay, we got two. How about since 2014? None. Okay. One, David. So those are all very important things, and you know, there's a lot of topics I could speak about today. Thanks, Iman, for giving me the stage. I had a great time doing the keynote pretty much this time last year in Dubai. And back then we were coming off of an all-time high. It was like 64,000 just a few weeks earlier. And we were wondering, and I was wondering, and we were all wondering whether we were going to continue to go up. And then all of a sudden Elon came out and said, after saying that you know, he was going to accept Bitcoin for buying Teslas that really helped fuel the rally. All of a sudden, he came out and said, "Whoop, I got to wait and see. Maybe it's not that environmental." And it really was a pile-on, and things went down to about where they are today, around 29K. Then they went up again. Then they went down again. And it's been kind of a topsy-turvy world ever since. It did recover to a new all-time high by the end of the year of 69,000. And then it's pretty much been down ever since. So I want to talk a little bit about the cycles, about how not to be afraid of the cycles, about how to use the cycles. You're never going to get them all right. I certainly don't get them all right. Hopefully, all you have to do is get close to right, and it can be a great source of building intergenerational wealth. And we still are early. We're not as early as, you know, I got in early 2013. My very first conference that I spoke at was in July of 2013, and the price of Bitcoin was $67. So I don't think we're going to ever have another 1,000x from where we are now. That would be a $29 million Bitcoin. But it's certainly within the realm of possibility that we can be at 200, 300, 500,000 within the next decade. And I do believe that we're going to be at 100,000. We perhaps should have been this time had there hadn't been some extraneous factors like the war and the Fed. But we'll get into that now. Yes, it's a bear. It was actually kind of uncertain for much of the first 4 or 5 months whether we were indeed in a bear market. There were a lot of, you know, TA people, the technical analysis chartists, going into April, noting that April historically has been one of the best months ever. And they were saying, well, we're going to go up 30, 40% and hit the all-time high of May, and then that'll be the cycle. I certainly thought that was probably going to be the case, because one of two things, and I'll get to this a little bit in my 4 Seasons of Bitcoin, one of two things was probably true. Either the 4-year halving cycle would prevail, which meant that we'd already hit the top, or we had lengthening cycles, because the very first halving was 12 months, and it went up 100 times. $12 to $1,200, 2013. And then it crashed 85%. And then the next cycle was 18 months because the halving was earlier in the year. And it went from July of 2016 at $600-ish, $630, to almost $20,000 in December, 18 months later, 30x. So the logical math, as far as I and a few other folks who believed in the lengthening cycle, was 10x in 2 years. And we'd see how long that would go before you end up crossing between halving cycles. Didn't happen. And we'll see whether the war was the factor, whether the Fed was the factor when we come out. So it still is theory. As Mark Twain has famously said, history doesn't repeat itself, but it does tend to rhyme. And so you have to become a little bit of a musician here, a musician and a magician. This is from this morning. We had actually been over 32,000 yesterday, and there probably will be a rally up to 40K sometime in the next few weeks if all the history projects that we're going to come back toward the support band of like teasing with the next kind of bull market support band. But so far every rally's gotten whacked and sold out, and sure enough this one did too. People will go and blame this or that in the news, but really it's just that there's not a lot of buyers. Retail is out. Retail is licking its wounds for buying too much at 60,000. And please, if you're a retail buyer, don't make the mistake that most retail buyers do of buying high and then panic selling low. Read your history books. And so we're going to talk a little bit about the good of where we are right now. We're still up over 300% since the last halving. I mean, it's not the end of the world. You listen to CNBC and some other media, and they'll be like, crypto's dead. People are getting blood in the streets because it was 69,000. Now it's 29,000, going to zero. And it's just like, not everybody bought at 69,000. And even if you did, you're not forced to panic sell now when you know that the odds are it's going to be over 100,000 in the next 3 years after the next halving. Users and hodlers, those who are actually holding on to their Bitcoin, are both at all-time highs. I can show some graphs and charts, but we're around 240, 250 million estimated users from, obviously there's even more than that for wallets, but the unique users is estimated around 240, 250 million. When I got into crypto in early 2013, it was barely over a million. So we have been growing. Dimitri Buterin, who's a Toronto resident, did a chart, Vitalik stat, of course. I presume most of you know that this is the birthplace of Ethereum, right? So, in fact, one of the co-founders, let's hear it for Toronto and Ethereum. One of the co-founders with Vitalik, Anthony Diorio, told me he's going to be at the BitAngels breakfast, which is right after this, so please come by. But the chart that Dimitri Buterin had posted a few months ago showed, as they noted on the last panel, I would agree we're around 1997. The stats actually back it up in terms of number of users. In 1994, there was only about 20 million users on the internet. By 97, there were like 200 million. By 2000, you're at a billion. So just take this year being 1997 and just fast forward. In 20 years, we should be at the same size of what the internet is today, which is about 4 billion. Maybe be higher because we don't have to build the internet, right? We already have the internet. You just have to simply open a wallet on top of it. So there's many new well-funded chains. 8 years ago, 2 bear markets ago, there was Bitcoin. And there were a couple of things that were sort of just other mineable coins that were like maybe a little easier for miners to go and be able to accumulate coins. Litecoin was called silver to Bitcoin's gold. That was it, pretty much. I mean, 2014 was the birth of Ethereum. Didn't even really hit exchanges until 2015. The first Ethereum ICO and the whole beginning of that wave was late 2015 with Augur. And and that was the whole dawn of that cycle. Now you've got many well-funded chains that are what they call layer one infrastructure. So it's not just Bitcoin and Ethereum that you can build things on. Polkadot, which is another, along with Cardano, Ethereum co-founders who then went on to create new ecosystems. And then there's Near, and there's 20 layer ones that we could discuss that all are pretty well-funded right now. NFTs are onboarding millions of new users. Many of them don't even know how to buy with crypto. They're buying with credit cards, but it definitely has their attention when they see Bored Ape go from a couple of $100 to $250,000 in a short period of time. And DeFi, decentralized finance, is here to stay as much as the regulators want to stamp it out until the only DeFi is owned by Goldman Sachs. But the genie's out of the bottle on that one. Once you show people that you can use math to eliminate a lot of the banking functions that keep you down at 0.2 or maybe now it's 2%, when you could be getting 8, 10, 12, even more by using some of these mechanisms to really facilitate lending and peer-to-peer lending and derivatives, et cetera. Okay, this is also the good news, which is this isn't the chart of the last year where you saw everything going down. This is the chart since 2013, and I highlighted July of 2018 where it was like $70. That was during my first conference. So as you can see, if you got involved at any period of time other than maybe at those Twin Peaks last year, you're doing pretty well. And if you look at this chart in 4 years from now, you're going to see that it's most likely higher. So part two of the good. If you're building a company, and I encourage you to do it in a bear market, you can hire talent more cheaply. There's less noise out there. People are getting laid off from places like Coinbase, and they're looking for jobs, and they've got a lot of experience from building during the bull market. You have more time to build it right now. You're not racing to just get something out before your competitor does. As they say, necessity is the mother of invention, and there's a lot of things that are invented. I mean, this is not just blockchain. If you look at all the great tech companies, Google was, in a deep bear market for the NASDAQ that they came out. Same thing with Microsoft, Oracle, Sun. The list goes on, Facebook. And as an investor, there's tremendous value out there. And you deserve the tremendous value because it also comes hand in hand with tremendous risk. You have to really do your research much more so than you do in a bull market when all the rising tide lifts all the boats, and when the tide goes out like now, you can see what's left among the wreckage. My friend Brock Pierce tweeted this in 2019. He's been widely quoted a few times. Bull markets produce bullshit. Bear markets bear fruit. And I think those are wise words. This is the time to build. Okay, the bad about it, some good projects are going to die young. They didn't get enough funding. They don't have people FOMOing after them anymore. They're not wanting to go and realize it's a new world and kind of pivot and say, maybe I don't need to raise $50 million to build this. From the actual Bitcoin market and some of the other markets, whales and market manipulators tend to get their way because there's lower volume. It's a lot easier to sort of, you want to go and liquidate someone. If you got 10,000 Bitcoin that you got for a nickel, you can just go and cause the market to go down $10,000 because you just sell it and then you got a short. And you can see this on chain and you don't know who it is because some of these are anonymous whale wallets. As the market gets bigger, there'll be less and less of this. And in a high volume scenario, it's harder to do, which is when the bull markets happen. Newbies tend to panic sell at the exact time that they should be cost averaging. Don't do that. And, unless you actually sold a ton of what you already had in crypto at or near the all-time high and you feel like you've got enough now to go and buy it back at half the price or less, it's an emotional roller coaster. You're looking every time that the price goes down to an new all-time low and then it rallies and you're thinking, okay, this is it. I got another chance at making some money above where I bought in, and then it goes back down again. And, it's tough, but you get used to it, and you have to just sort of realize that hodlers sometimes who don't touch things at all have done quite well. So don't panic and try to always make sure you have some spare cash to pick things up at the absolute bottom. Okay, we'll talk the ugly then. Governments love to grandstand during bear markets. They're trying to protect people from problems that maybe don't even exist anymore. But right now they're bad DeFi, they're bad stable coins. Luna, which we'll talk about a little bit later, caused $40 billion to go poof. And so they're trying to say, well, maybe Tether will do the same thing. Maybe USDC will do the same thing. Maybe anybody who's not Goldman Sachs will do the same thing. And so expect a lot of proposals, and it's an election year, too. The media also loves to whip up controversy and panic. Again, oh, Bitcoin's going to zero. Oh, the government's going to shut down Bitcoin. Don't believe it. I started out in the media. I still deal with the media a lot. They're trying to sell newspapers. They're trying to, I don't know, are newspapers around anymore? They're trying to sell clickbait. And then, goes without saying to watch out for fraudsters in all seasons. There's more of them in the bull market, but they're still around in the bear. The 4 seasons of Bitcoin, I'd mentioned this before, the market cycles and the halvings. Every 4 years, the amount of Bitcoin gets cut in half. And that then means that at some point there's a supply shock, and it tends to happen about a year to a year and a half afterwards so far. This one was pretty much right on schedule if you figure that the November was the actual peak. And then the fall and the winter usually take about a year and a half or so to play out. We right now had the all-time high of this cycle 1 month prior to the all-time high of the 2017 cycle. And last time the low of the cycle was in January of 2019, and prior one was January of 2015. So potentially you'd be looking at January of 2023, or perhaps might be a little earlier, November, December, even October of this year. But you can expect that the price will be lower, perhaps as low as 20K. Bitcoin maximalism. More people are holding Bitcoin during bear markets. So your altcoins tend to get wrecked. Ethereum doesn't do too well. Supply and demand. At least there's not a lot of new tokens coming out right now. And there'll be some ones that die. We do have a lot more interesting exchange environments than we did 4 years ago. 4 years ago, they were talking about, will the DEX be allowed to live by governments? Because there were ones that got shut down and people were jailed. Nobody's jailing Uniswap, not yet. Same thing with SushiSwap. And you may have seen yesterday Gary Gensler, the crown prince of the SEC, basically announced that he's going to be looking into whether Binance Smart Chain is a security. And, of course, it promptly dropped 10%. Doesn't mean he's actually doing anything. It was a non-U.S. project, but we'll see. He makes statements and markets shake. On the other hand, there was, I thought, good news a week earlier when a district court found that they allowed a defendant to basically choose, where they wanted to go and defend themselves in a state court with a jury, as opposed to the SEC in many cases literally is able to go and say, we're going to be the prosecutor and the judge and the jury. And that's not really the American way. There's a lot going on with futures, a lot going on with new DEXs. I think that we're going to find some interesting innovations coming up shortly. I'm excited about AMMs that can actually place positions so that you're not having to balance things. There are a handful of them out right now. Atom Labs is one of them. You can go in and say, I'm going to, put buy-sell orders just like you would on a centralized exchange, but you can do it on a DEX. That I think is going to be gigantic when it scales. So a couple of X factors about how quick our recovery is going to be. Government, and these X factors are actually things I talked about in the Dubai presentation for any of you who were in Dubai last year. But this time I had to add the Fed. Wall Street, and for the first time, we're more correlated with Wall Street than not. Historically, Bitcoin has been 65% not correlated. When we went up 100x in 2013, NASDAQ did not go up anything close to 100x. I don't think it even doubled. But now, all of a sudden, NASDAQ goes up, you might get a little weak rally with Bitcoin. It goes down, Bitcoin gets killed. And a lot of that, I believe, is because retail is out. Retail basically put their bets on Dogecoin last year and then said, oh, it's not going to $1. I bought it at 50 cents. It's 10 cents. I'm out. I'm stupid. And they'll come back when, I don't know, I guess Dogecoin's $1 again. We'll see what happens. But I'm personally a fan of let's stop calling it Bitcoin and start calling it Satoshis. Because I'll tell people, hey, you know, 29,000 is still a pretty good price to buy Bitcoin. And, oh, I can't afford 29,000. Well, can you afford 2,900? Can you afford 290? Oh, well, I wouldn't want to buy just 1/100th of a Bitcoin. Well, how about 1,000,000 Satoshis? That's what 1/100th of a Bitcoin is. If you got 1,000,000 Satoshis for $290, that's a lot more than Dogecoin you can get for that. So at any rate, I think that's a psychological thing that we should remind people of. Stable coins, central bank digital currencies. Last year in Dubai, I was talking about the growth of them. Now, I think there's a lot of interesting things because shortly after that talk in Dubai I gave, we had the government of El Salvador say they were going to use Bitcoin as their one of their national legal tenders. And you now have 20 other countries that are considering it. The traditional CBDC, though, is one that just sits on the central bank. I believe for them to be effective, they have to actually act like cash and not just act like a bank account. Because if you have a bank holiday, your digital currency doesn't do any good if it can't be taken out. I'm an advisor for a company called Terpin that specializes in these markets, and I think it's an exciting future. Stable coins are still a very big market, but being highly scrutinized because of this little thing. I'm sure you all recognize the chart for Luna. Up, 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 and then 99% down. I don't want to go into much detail other than I've never been a fan of algorithmic stable coins. I worked with one in 2016. I told them it was going to go to zero, went to zero. So did this one. DeFi, as I mentioned, is still going to be growing and growing and growing. You'll find a lot of new innovations that happen in the bear market, and there'll probably be a new leader that you've never even heard of when we come into the next bull market come 2024. NFTs. NFTs are going to be a little relatively exempt from the bear market. They're going to follow slightly different cycles. Even though they're priced in Ethereum, the price of Ethereum will keep going down. If you're valuing your worth in Ethereum, it's still a good store of value, and I think that there's still a lot of opportunities for new projects, not just the next Bored Apes, the PFPs, but I think enterprise software using NFTs is going to be a big opportunity for people to build on, as well as I think that NFTs will replace social media and will have the control of the user. So summary for investors. I hope you have some cash. It's a great time if you got cash. And it's also a great time to build things. And a summary for founders. You have to get real. You have to get realistic. I encourage everyone to go and look at some of the new crop of companies that we're going to be presenting at 11:30 in just a few minutes, because I know we're running a few minutes late here. At the, I think it's the lunch area for the Bit Angels brunch. Kudos to Bit Angels Toronto. And they have been working with us for a number of years now. They're one of our top chapters. I started Bit Angels in May of 2013, so it's our 9th anniversary last month of just trying to go and connect startup companies with angel investors, because back in 2013, even though there were VCs around looking to invest in crypto, there was no angel group, and so I started it with David Johnston, who went on to do some great things. He's now running a public company in Norway, and we both live in Puerto Rico. Anybody who's interested in Puerto Rico, seek me out, and I will tell you why it's a great place to build companies and to live, particularly if you have an American birthright. I think that what I advise a lot of companies to do right now is to not just look at your token. In the ICO era, it was all about the token. It was like, hey, I don't need VCs, I don't need angel investors, I just got the token, we're going to sell it for $50 million, and we're all going to retire. That's kind of no longer the case. And most of the companies that didn't really have a value proposition, those tokens are now worth 0.000000001, if that, with no volume. And what you have, though, is you have a situation now where most founding teams are building something that if you're building a platform first, you're still going to want to go and build a tool company, right? So for Ethereum, which is a platform, it can be a foundation, it can be a DAO, but you still want to go and have a for-profit company that you can raise equity just like any other for-profit company and build the tools. For Ethereum, as a platform, you then have one of the Ethereum co-founders, Joe Lubin, go and build Consensus, which is responsible for great tools like MetaMask. And so there's 3 buckets now you can raise money in. You still have the token world, although there's a lot of, legal hurdles that you have to jump through, much more so than before. A lot of my advisory work that I do with new companies is helping them navigate them and find the right legal opinions for what they're trying to do and the right jurisdictions. Canada, of course, has kind of gone up and down in terms of being friendly. I'm hoping that they will continue to look at it as an opportunity to have the next Ethereum actually housed here and not have to go to Switzerland. And then the tool companies can be anywhere, right? I mean, they're typically Reg D offerings in the US or the equivalent in other places. The token companies are typically going to be DAOs in places like BVI. And then for your equity or for your token, NFTs are a great way of creating revenue and community and not giving up any equity. And it's actually revenue. And that is something that didn't happen 4 years ago for the most part, and it's been a huge part of building a startup today. So I've got 2 minutes left, and I think everybody needs to walk over to the BitAngels breakfast, and so I'm going to, kind of yield my 2 minutes to the next speaker. Thank you so much. And let me put up my my screens here. That's me. I'm at Michael Terpin on Twitter. That's my Telegram. LinkedIn, I respond to all the LinkedIns. If you tell me how I know you, just say, I heard you talking to AIBC, and I'll connect. That's my Facebook, my Discord, my email. And again, Websites Transform Group is my overall group, which includes the advisory, the PR firm. Coin Agenda is our conference that's a global conference for investors. The next one is in Las Vegas in October. And then we also have a big one as part of Puerto Rico Blockchain Week in December. And then the BitAngels Network. Again, you have one very great, high-profile chapter here in Toronto, and we're also in about 20 other cities. And thank you, Toronto.